All right, ladies and gentlemen, I hope you had a wonderful day. We had a very crazy Monday to start off. I mean, there was a bunch in the morning we could talk about, but my goodness, what happened to bond rates? Like we were saying with rates, that is the main theme. And what we opened up to this morning, it was a lot of carnage. So where the yields go, we have a lot of things to talk about with that. I'm going to give you a mini lesson on that. However, we have to talk about oil, the dollar, where we go from here, because we have a lot of data this week that's going to move us. But in the meantime, where are the broader focuses? And even after all this data, where should you end up looking? And even after today, man, think about it. It was another green Monday. That is now 6 green Mondays in a row. I want to say it's like even 12, because from the beginning of August, I think you had like one red Monday. All the other Mondays were green. But if you haven't seen the daily chart, those green Mondays don't tell you anything about how the rest of the week is going to end. And on top of that, you have 4 days left in the worst 10-day streak of the market. If you are not familiar, this is that seasonality we were talking about yesterday, but the final 10 days of September, those are the worst days of the market ever. You go throughout history, document those days, end of September, end of the Q3, it is usually not good. So we have 4 days left, and then October, the seasonality actually gets a lot better. But we'll talk about it when we're closer to there. For now, I got 2 little mini lessons for you. We'll go over plays. I covered one of my bond shorts, and now I'm going back and forth. I got a little visual example to what I meant with a lot of those bond plays we've been talking about. Then I got 2 other plays I'm watching tentatively, and then we'll see what the market throws at us. So Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. All of this is live, and my goodness, we have some great discussions today. So if you want to have a good discussion, you got some good questions, we will see you there in the morning. But Chad, it's going to get wild here, and like I said earlier, I hope you watch yesterday's video. That will prepare you on the schedule. We got to focus on some broad stuff, but that calendar, oh my goodness, there is a lot. So I hope you're ready, baby. Run it.
Working to the couch, it's the 2020 legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Ball right off the bat, Habibi. I am not going to waste your time today because, yes, there's a lot that happened in equity land, the news. You had Speaker, or you had Fed Bullard. He made some comments. There was headlines about Evergrande in China. You're hearing about everybody shorting and all of that stuff, and it's all good and important, but the bonds are more important. And the story today was the blowout, and now the rates have finally gone above 4.5. I'm showing you the 10-year, the plays that we made on ZB, TLT. That's the longer end of the curve, and it's even worse now. It's starting to catch up with the trend of rates going higher. But why this is so important, we've talked about this every single time. Remember, 375 puts 4 on the table. 4 puts 425 on the table. You break through 425, now 5% or 4.5 and 5% are on the table. Well, it's taken a lot of time. Even this is a year chart, and think about October and all of that. Yields are higher. That is the theme. This is why we're saying, rates are never going to come down. We had a very interesting talk on stream today. I will make a video on it, but it's very simple. It's either the rates are going to come a lot lower than we think very soon, or if they don't, what the bonds are showing, like we've been talking about, comparing this to 2006, 2001, you are getting the same exact vibe there. So we've talked about 2006 holding up, but then just the other day I was saying it's starting to look like 2001, and that may be very well what we are getting. So this is the big story here. It will have an effect on the dollar. A lot of people are asking, though, why don't stocks come down? Is this going to break end everything? No. The number one thing we talked about today, especially with should you buy TLT? You have to be mindful of duration risk. The point is, we don't know when it's going to crack. In theory, higher rates is going to crack a lot of stuff. Eventually, there will be a point of no return where it causes a lot of damage, but we don't know where that is. Again, at different times in history, it was reflected at different yields. That's the whole this time is different. Well, it's pretty much the point to which it cracks. So the theory is the same, but generally speaking, the same levels, they're not going to really guide you here, but we are going up a quarter at a time. But the point is now, yields are going out that higher for longer. How to prepare for the end of this year and coming into next year, that is the reaction we are really well getting right now. Does it mean something breaks imminently? No, but this is going to be the biggest dynamic, and that's why I'm saying I'm watching the data to move the bonds, and I'm going to be using that to just even make plays. It might be some better volatility. Go look at the move index. The bond volatility is not really there, so keep that in mind. That is your first thing, but now number two, your second lesson. One, I want you to understand the bonds a little bit, but this is where it gets a lot better here. We got to go down to the dollar. The dollar keeps getting strength, and we've been talking about this, and I have been bringing up this thing for a while, but one scenario will explain everything. Lately, I've been telling you, yes, the dollar is big. This is even the speed and velocity is one of the biggest. This is not good with what we are seeing with the dollar. I had to bring it up here a little bit so you could see it, but the thing I've been telling you is that look at the bond yields broke out. Think about last time we had high bond yields. Dollar was up too, but the dollar was a lot higher. The thing people need to understand right now is that the euro, the pound, and other stronger currencies, they are hiding or masking the real strength of the dollar right now. And I've said this a lot, but this is going to explain it all to you. It is the reason why oil is going up and the dollar is getting stronger. Oil is priced in dollars. You would think that if the price of oil was going up, there would be a cheaper price of the dollar. Essentially, lower price, you have to spend more dollars to get oil. Now, oil is going up and up and up, but the dollar is getting stronger and stronger and stronger. Why would that be? And it is the dynamic with the rest of the world. Essentially, why the dollar gets stronger with oil, because as oil's going up and everybody needs oil, these other countries around the world with more inflation, higher oil is hurting their currency, and that's why it's helping out the dollar. So oil going up, it's weakening currencies. It's just not weakening the dollar. It's weakening all the other ones, and that in turn is making the dollar stronger. This is the whole point of the masking that I am talking about here, where the euro and the pound, they are still elevated, especially compared to last year. That's why the dollar, even with the yuan and yen, they're up there. Even when we're watching oil go up and the dollar go up, what this is telling you is there's something going on overseas. You feel fine, but overseas, that's where you're getting these reactions, and then eventually we will see it, or maybe we won't, and then we'll see if whether or not it's contained to them or contagion, whatever else happens. But clearly something is happening, and that's why now dollar and bonds, they are the main focus here. So I was going to end it there, but then I wanted to show you this. I brought this up on stream, and there's a couple of new things to it. But remember, I was telling you on stream that there are other dollar indexes that the Fed puts out, and a lot of people aren't familiar with it, and that's where fred.stlouisfed.org comes into play. And I noticed here they discontinued a lot of the indexes. You got to play around with it a little bit, but the whole idea is the things that I'm talking about here now, they have multiple indexes for this. You have nominal broad-based, you have nominal advanced foreign economies, nominal emerging market economies, but pretty much if you compare the dollar to different baskets and groups, different countries, you are going to get a different value. That's why when we look at UUP or the DXY, what you're getting here, this is more of a broad-based average of all of them. So even then, this says 105. You go here to a nominal emerging markets, or where's the other one? Just I think the broad-weighted index, it's showing you a dollar of like 122. But even if you look at the peak here, the peak in October, this was a lot lower. Look at how this chart looks here. Again, you had a giant peak in 2020, then the dollar came down and then rocketed back up. You know, we're like right there in the middle, but if you go and look at UUP, that whole that looks a lot different there. Again, otherwise the 2020 peak, the dollar would have been around here, but that didn't necessarily happen. So this is if you want to get into the nitty-gritty, but like I'm saying, this might take some more time to materialize, but this is definitely an interesting dynamic that we have in play right now. So hopefully you enjoyed all of this. I hope you learned something, but now let us get into the plays. So, right off the bat, I got a couple of different plays. I closed out of my /ZB, made like $3,000. That was part of my curve steepener. I lost on the short end, but made more now on the longer end, so that was good. And then today, this is probably the first play I'm going to tell you. I closed out of it, then I made like one play at like the bottom of the range and flipped out for like $60. I think I played it on one of these ones, and then I got in again. I'm still in this play. I want to close out. I think right now it's either break even or I was down like 200 or 300 by close, but right when the futures opened up, it bounced up a little bit. But my idea and what I was saying today is I want to get rid of these plays. I want to play the bonds now and the data. I think we might be entering in that season, or at the very least, volatility is so much lower in these assets. Even though it's moving a lot, it's one direction once it kind of decides there. But my general idea here is I want to play the data and I want to play the bonds until we really get some ideas. And now coming into this bad seasonality, getting a picture of October, if we are going to get bored and want to focus on something, there is so much excitement here. But I've been looking to make trades, so I'm holding ZB to the upside. I closed the short, and pretty much intraday I'm going to go long and short depending on the trend. I have no loyalty, but we did talk about it. I do think rates can go higher, but there's also still a chance of an imminent cut. But you're going to have to go back on stream or wait till I come out with that video. But in the meantime, trades back and forth, data, longer term end of the bonds, I think that could be a lot of fun there, and that's what I will be doing. But that is play number one. Then play number two, we talked about this one on stream as well. It's an interesting one because they give these like quarterly updates in advance, but Costco, they have earnings tomorrow, but that quarterly update on sales, they gave it like a month ago. So for the most part, there's going to be stuff about like membership surprises, maybe even margin excluding gasoline. That's what people are going to be looking for, but I don't know how much it'll move. But given the consumer, even today, Nike, Foot Locker, and a bunch of consumer names got downgraded because of the consumer. We'll see what Costco does. This could at least either give a sigh of relief or it could kind of spark some renewed concerns. But every time we worry about the consumer, you know how this Costco play always comes up. So keep that in mind. That is play number two. And then finally, play number three. This is if and only if things get really bouncy and hold up. But Amazon, they killed it today. They said they're making a $4 billion investment in AI. I mean, look at NVIDIA and everything else. I mean, I don't know where the AI stuff is for now. I mean, especially after the killer earnings, but it caused a reaction today. And like I'm saying, if things get good, you get that bounce, especially if it looks like it's going to be positive for October with that seasonality. Maybe some of that news hits, but don't forget, end of the quarter, rebalancing, all of that, it is going to be a trip. So going to be watching those. Those are the main plays. Besides that, yen and bonds make life simple. Still in some of the other trades, waiting to wind down. Maybe I'll have to wait till October, and we'll find out how that plays. But for the most part, as long as nothing gets in the way, policy, data, I think that will be our real drivers. And then we'll see how the market takes the dollar and bonds in the meantime. And then if the rest of the world, hopefully and pray they don't have any problems as well. And then we see what happens. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, the weeds can't kill the seed, baby. I don't know. You walk through the distressed property, you see the weeds and they're high up, but it don't mean that there's not a plant there, bro. So I let the good and bad grow at the same time and separate them. You don't need the answer today. I promise it will make sense at a later road, but be careful because when the good and bad first start growing, you try to uproot it, you might get rid of the plant. So let the good and bad grow and separate them. Oh my gosh. I mean, I'm sorry for I was pointing mad aggressive here, man. I'm sorry. I need to calm down, bro. But I love you. Drink that water. Stay hydrated, healthy. Let's trade some bonds on 2K tonight. I'll see you on the stream. It's the Twitch stream. It's good if the stream lags too, but I love you. God bless you. That's it. Happy holidays. Do we say happy holidays or do I tell you happy Yom Kippur? Oh, but what about Christmas? Oh, what about... Oh, okay, I'm going to leave. They banned me. Horn.